Mr. Jason Fung to the stage. Please welcome with a warm round of applause.
Good afternoon. Well, first I want to thank everyone for coming today. It is not easy sitting here at 5 p.m. in the afternoon listening to us lecturing about the future on digital asset. But I will do my best to share as much alpha as I can, to share as much information about my opinion on the future of DATs, but really my focus is more on Bitcoin, right? So a bit of background on myself. So I started investing on a professional level in 2015. My first firm was at Fiducian Capital, and the title was GP at the firm, and I left in 2017 to start my own fund, Soraventures. About 2 years ago, we decided to venture into the Bitcoin narrative, and that was the time when Bitcoin ETF just got approved. Why we did that? Because one, we've always been Bitcoin investors ourselves, and two, we really think that was the time when institutions could get involved. You know, before our time, we would tell people we do Bitcoin, and depending on the Bitcoin price, sometimes you get comments like, "Oh my God, you must have lost a lot of money," or like, "Oh my God, it's like you're making a lot of money." Right? There's never been kind of like a stable narrative of how okay, Bitcoin is kind of a thing. After the Bitcoin ETF, I think that's when we start to pick up a lot about from institutions recognizing Bitcoin as an asset, recognizing this as a career, recognize this as an industry. And so about 2 years ago, Soraventures started venturing into public companies. That was a time when no one was really involved with public companies other than Michael Saylor himself. What we did do was we started out investing into the narrative around DeFi and Bitcoin. So the idea was that you could obviously do a lot on Solana, you can do a lot on Ethereum, but not a lot on Bitcoin. And so we invested about 30 companies, ventured. These are venture deals, startups around the world that invested time, energy into building the future of Bitcoin. What we did learn in the process was that Bitcoin as a blockchain has its limitations. And so we started to look on things that was still on Bitcoin, but had a kind of a narrative, which is at that time not 100% on chain. And that was, we looked at it, and that was mostly products from regulated products, most like strategy. And so we were the first company to take what Saylor built and then launch it in Asia. And so 2 years ago, we ended up buying a third of MetaPlanet with our partners, and then we pivoted MetaPlanet from a one-star hotel in Tokyo Stock Exchange to becoming one of the largest, the fastest growing company on Tokyo Stock Exchange. And then after that, I left the board in MetaPlanet to pursue more of these products around Asia. So as of today, we have 6 public companies in Asia. We've done one in Japan, we've done one in Hong Kong, we've done one in Thailand, we've done one in South Korea, and then more recently, not announced yet, but we signed the paper actually just last week, Taiwan, and then we'll have Vietnam in Q2. The idea is that Bitcoin as a product is still very early, and the way that we look at this industry is that there will be more products out there that's powered by Bitcoin, that's going to be powered by digital credit. And the way I look at this is that, we look at the Japanese 2 years ago. If they want to buy Bitcoin, they have to pay this crazy tax, 55% unrealized gain tax for the Japanese. And that's how regulators govern the way people use digital assets, right? But when we did MetaPlanet, what happened was that people can now buy stocks that is backed by Bitcoin. By buying the stock, you don't have to pay that 55% unrealized gain tax. Now you look at other products that we've done across Asia. All of them will all have a Bitcoin narrative, but a product on top. And the idea is that these products will bring more utility for people who want to get involved with digital asset. So the way I think even today, which is most people in this group probably understand Bitcoin. Most of these people today will probably have some form of a digital asset, but our parents probably never touched Bitcoin. Our grandparents have probably never touched Bitcoin. some of our friends' parents never touched Bitcoin. Why? Because they're not used to the process of buying Bitcoin. They're not used to going on an exchange to do KYC, AML. They're not used to learning how to manage a wallet. And so what we've built in the last couple of months is that we've built an opportunity, the first time for a lot of people to get involved with buying Bitcoin through our stock. Right? People who have a bank account, they can now buy our stock that is backed by Bitcoin. And because of this, we've seen a huge demand of similar products last year, which they call it DATs now, in the US, right? People have basically mimicked the same model by using Ethereum. Some of them have done with Solana, and so on. But as kind of like the pioneers in this narrative, we've taken a very different approach. And one you will learn very soon, because Paul from BitPlanet will also be on stage to talk about how we look at this differently. But on day one, we never took the approach where we want to raise a lot of capital and then build a product. Then the approach that we took is that when we go IPO, that is the start, not the end. And so we've always realized that it takes time for something to mature. It takes something time for, and the audience, the regulators also need to understand that, right? And because we're doing this in Asia, Asia is not the US. Asia is one of those very unique places that, because it's very difficult to do it, people value it. Right? In the US, you can launch a DAT whatever you want. Buying a shell in the US is not expensive. Right? But in Asia, you want to buy a shell, integrate some form of Bitcoin or digital asset DNA into your public company. Very hard to do. Very, very hard to do right now. And it will get even harder as we move forward. And so the idea is that, whereas there's a lot of opportunity in building Bitcoin-backed products, and this Bitcoin-backed product can range from AI infrastructure powered by Bitcoin. There could be energy infrastructure powered by Bitcoin. It could be banking, Web3 banking infrastructure powered by Bitcoin. Saylor talks about, Michael Saylor he talks about digital credit all the time, powered by Bitcoin, right? The future is what we see is that there's really just free entry point to a lot of these products in the future. They'll be launched. They'll be either coming out from banks, financial institutions. They'll either be coming out from crypto exchanges, or it'll most likely come out from public companies, entities, right? And so what we do know, at least in the last couple of months, is that we've built an incredible opportunity for people who want to launch digital asset products. Whether this is in Korea or in Hong Kong or in Thailand, they're coming to us to partner with us because they understand the value of a public company with a Bitcoin DNA. You're looking to build products, regulated, clean, something that they can work with. Public companies are generally pretty suitable just because they're relatively new, they just bought Bitcoin, and that's kind of the way to do it. Is how do you buy Bitcoin? There's many ways to buy Bitcoin on the balance sheet, but how you do it defines kind of DNA and the kind of the mentality here. And again, Paul from BitPlanet will be on stage, we'll spend some time talking about this, but that is one of the reasons why we've invested so much money into this play. Now in Korea is one of the most important markets in Asia, right? If you think about it, Korea should be number one in the Asian market ahead of China, because right now you can't trade digital asset in China, but you can trade in Korea. But the opportunity for institutions is still very early. As institutions today, you can't trade on the crypto exchanges, not yet at least, right? So the opportunity is very, very early. What we do want to see is that in the future, there's a lot more institutions coming in. There's going to be a lot of products that institutions can work with us to kind of launch products that is backed by Bitcoin. And the most importantly, I think that's where the real money is. I think that's a real opportunity, where you launch products that have kind of the idea of kind of making finance much more efficient, getting the ability to achieve that level of Web3 banking or Web3 finance a lot more efficiently. And in the past, it's always been on DeFi, right? In the past, it's always been on chain. But in the future, which I do think that's an opportunity, it'll be in a form of hybrid, where there's going to be an on-chain component, there's going to be an off-chain component. So I think the rest of the time I will invite Paul from BitPlanet, the CEO of BitPlanet, on stage to talk about some of these matters. But I hope, hopefully from this we can also kind of learn how we're investing into Korea, how we're kind of positioning ourselves in Korea, and most importantly, how we're looking to see ourselves different compared to other DATs in the space. Paul?
All right. Hi, everyone. Everybody awake? Yeah. This is probably the first session that's not going to touch upon stablecoin, so a little bit of a change for you, hopefully. Hope I didn't jinx that, but we'll get started.
Okay, so I'm sure most of you guys have kind of heard my background, but Paul, why don't you start by introducing yourself and how you got into this space and what's your background?
Yeah, so hi everyone, I'm Paul Lee. Korean name is Lee Sung-hoon. I'm the co-CEO of BitPlanet. BitPlanet is what I would say is the country's first energy-based asset investment platform, and hopefully I'll go into it a little more later. But I was born in Korea, I'm Korean through and through. Spent most of my career in the US. I studied at Stanford University and Harvard Law School. My first job was actually at Lehman Brothers back in 2007. Lehman Brothers private equity, and I was I was directly impacted. I had a first-hand experience as the world was going through the financial crisis in 2008. I was one of those guys, carrying out boxes from Lehman at that time. And I was 24, so I would say that was a formative experience, I would say, in terms of how I view leverage, how I view the modern financial market, and at a personal level, how I should build my career in the future. After law school, I worked as a corporate lawyer in New York, where I was fortunate to have clients like Grayscale and Galaxy Digital. And that was the first time I was introduced to Bitcoin, and so that was around 2016, 2017. So I wasn't the OG, but I would say I'm the second generation OG if that's a thing. And I was first interested in Bitcoin more from a regulatory perspective, given my background as a lawyer. But over time, I just realized the massive potential of Bitcoin. And the macroeconomic setup that the world was going through. And after that, I've been a venture investor in the Bitcoin and stablecoin infrastructure space for about 5 years. So I have a pretty interdisciplinary experiences that spans over, I would say, traditional finance, law, venture investments, venture operation, and now public markets. I think that gives me a unique and diverse perspectives in looking at things.
Good, and just to give you some numbers here, when I say I'm very bullish in Korea, just to give some number, when we did the MetaPlanet deal, we collectively invested $7 million USD into Japan. When we did the Hong Kong deal, we collectively invested $30 million USD into Hong Kong. When we did the Thailand deal, we did $20 million USD collectively in Thailand. And then in BitPlanet, we did more than $50 million USD investing into Korea, BitPlanet. And I think just to give you that idea is Korea is one of the most important markets of all the places we invest. And I think as of today, I think more foreign investment have gone to mostly MetaPlanet. I think they have invested about $5 billion to $6 billion USD into MetaPlanet at this point. But the idea is that I think if you do it properly, I think we should be expecting significantly more capital coming to Korea than Japan, right? And so I think I understand that very well. I think Paul does, but at the same time, would love to kind of get your perspective of why you went from this Lehman job in the U.S. and Harvard and Stanford, and now coming back to Korea.
Yeah. Look, I think Bitcoin and Bitcoin-backed treasury companies are really a response to, I guess, structural flaw or structural inevitability of the modern financial system, which is rising debt, accumulating debt, and currency debasement. So here we're talking about inflation, economic inequality, AI driving down labor costs, universal basic income, all those things. And I think I have a pretty strong conviction that the major force, or the spirit of age or zeitgeist or whatever you want to call it, the major force that will define the next 10 years, in addition to AI development, is the deterioration of fiat currency and the revaluation of scarce assets. So, I think Korean investors, I guess investors in general, like globally, but especially Korean investors, especially the younger generation, is very keenly aware of it, and they understand this intuitively, that Korea is one of the countries that will be mostly impacted, like they will receive the biggest impact from this, so to speak, paradigm shift. And I think Korean investors, the young generation, is probably the first generation that is less sensitive or less scared of volatility. What they're more scared of is permanent loss of capital due to counterparty risks that they cannot control. I'm talking about, again, inflation, all these political risks, here, tariffs, Greenland, Iran. You probably read about, what happened on the Japanese House election just a couple of days ago, which was surprising landslide victory. So all this political uncertainty that's going on around the world just presents more counterparty risks on assets that they hold. And honestly, these guys are limited in terms of their options. Real estate, this is going up the roof. Probably maybe we can talk about gold or equity or bond, or the traditional assets that's based on traditional companies. And while those assets still make sense for long-term holding, I think over time, just given the current macro setup and current political setup, over time there is going to be increase in the counterparty risk as people hold these assets. So I think I guess TLDR is what I wanted to achieve by founding BitPlanet is to give an option, a thoughtful alternative for these Korean investors to really invest some money in and expect a long-term return that outperforms the market. So Jason, I think I spoke enough. So people might want to hear from your experience. So you have built a network of, the largest network of DAT companies in Asia and possibly in the world. You've done, deals in Hong Kong, Taiwan, Vietnam, US, Korea, and other countries. Based on your experience, what is your lesson learned and how should you apply that to Korea?
Yeah, so, when we approach problems in life, most people like to approach problems in a way that, hey, what's the shortcut? What's the easy things? What are the low-hanging fruit? What's the easiest way to make money? I tend to think the opposite. I'd like to always think about what is the hardest thing that is to achieve, to accomplish. And even though we start out this narrative, like we're the first one who did MetaPlanet and brought all this stuff together, but we never had ever a single moment where we felt like we got to invest, in the U.S. market or in Europe, because one, we felt that in Asia it's very difficult to kind of copy and paste this, strategy model, this Bitcoin treasury model in Asia. Whereas most people want to just do it in the US or in Europe, we did it in Asia, and we stuck with Asia. And the reason for that is, that logic, which is like, if it's hard to accomplish, if it's hard to do, then over time you're probably going to have an advantage, which is what we've seen now, right? Which is like, a lot of the correction in the market naturally filter out our competitors, a lot of the people that quote unquote want to compete with us and now kind of like decide to pivot. And the most important thing is that, we understand this product probably more than most people because we're the one who start brainstorming about it, we're the one who start thinking about it, we're the one who start planning about it months before people even start to like look into this product. And so our understanding of the product is going to be very different from, I think, most US DATs and European DATs. But what I've learned is that in the last couple of months, every public company that we've built will have some alignment on the product level down the road. And that is going to be our core strength. And the way to look at this is that digital asset in the past, when we invest, we always think of it as a borderless product. Meaning that when you invest in blockchain, when you invest in Bitcoin, your mentality should always been borderless. It's decentralized, it's borderless, it's distributed, right? Meaning that, even when we raise capital to invest in deals, we don't tell people we're only investing in Korea, or we're only investing in the US, or we're only investing in Europe. We never think about that. We're always thinking about we're investing in the world, right? Because these products are borderless. And what we've created here in the last couple of months is an ecosystem of public companies in Asia that maybe for the first time, leveraging kind of the power of Bitcoin, leveraging the product that they built, would have a very strong synergy among all these public companies. And that's powerful because one, that means the future product that we launch is not just going to be in Korea. It could be in Vietnam, it could be in Thailand, it could be in Hong Kong, it could be in Taiwan, it could be in Japan, it could be in US, it could be in places. All the places that we think has an opportunity to launch Bitcoin as a product will have this market. A lot faster too. And two is that we realize that because, a big thanks to the correction in Bitcoin and all the stuff that's happening in our ecosystem, we've learned that it's even harder to have a public company with kind of, a DNA where there's Bitcoin DNA or, Web3 DNA in it. Because a lot of people now realize that this is something that's very hard to do, right? You gotta spend a lot of time talking to regulators. You gotta spend a lot of time educating the regulators. You gotta spend a lot of time investing your energy into figuring out a product that makes sense for the public company. Because remember, you're running public companies, you can't just switch from product A to product B. Maybe you can do that in the US, but in Asia it's very difficult to do that. And so you get to understand what is something that you can build with the existing tools and resources you have. And most people don't have that experience. And because of that, most people are afraid to move in this direction that we have. And because of that, we're probably in the lead because of that, because we understand we have more experience in dealing with this. And now what we've seen is that the industry has moved in a direction where a lot of people that want to build something similar with something similar with us 12 months ago or 8 months ago, they've decided to pivot away from that narrative. But we're still charging straight for what we're trying to build on day one. And because of that, a lot of the partners that want to work with us, they've now decided that, hey, we are the best partners to work with. A lot of the institutions that want to build something similar, they're now kind of approach us, we should work together, right? And so, at the end of the day, it's more about being persistent. It's never about raising as much capital as you want when you can on day one. It's more about scalability. It's about making sense of your product. It's about understanding the regulation. It's about understanding the local market, and it's about taking time because good products take time to build.
Okay. Now with I guess 5 minutes and 48 seconds left, we can go into the topic of the panel, which is the next wave of DATs. So Jason, what do you think is the next wave, or DAT 2.0 is all about?
So I've always told people that we want to get into building a Bitcoin treasury company, but at the same time, a lot of people will ask us, it's like, hey, this Bitcoin treasury narrative, it's not working anymore. Like we're below 1 NAV, and a lot of these companies are struggling. Like, what do we do, right? And that's a question that I get asked a lot, even by pioneers, kind of my peers. And And I'm sure, depending on which market you're at, in the US or Europe, you have different response. But the way I've always looked at it is that, I spent 10 years of my life investing in blockchain, and every narrative that we end up investing, it all kind of boils down to one thing, which is when can we see a product that has kind of real efficiency, where institutions can be part of it and we can make everything much bigger. What I mean by that is, if you look at the top 100 public companies in the world right now, I think none of them are Bitcoin or Web3 related. But maybe 20% or 30% of them are now AI related. So the market opportunity is that, yeah, we have a lot of money in our space, but it's not big enough for institutions to get in. And it's definitely not big enough to get in the top 100 public companies in the world, right? So how do you build products that make sense for institutions? How do you build products that make sense in the large narrative, which is, not just talking about banking. Banking is one of them, AI is one of them, energy is one of them. There's a lot of things that blockchain and Bitcoin can have synergy with, and none of them right now, I think, is being kind of really pushed towards kind of large institutions. One of them is because most of the products in our space are DeFi. They're on-chain. The minute you're on-chain or DeFi, it's kind of like hard to work with regulated parties because they don't want to touch that. All right, they're not comfortable touching that, right? And that's why I'm saying products that come out from public companies will likely have a very good chance where they will be able to produce products that kind of meets the middle, right? Which is the way I kind of explain to people nowadays is that Web 1 have done a really good job, doing what they're supposed to do. Web 2, which is the digital age, have done a very good job. That's the age when PayPal and Elon Musk and those guys came about. Web 3 is a time when people like us will have a very good chance on really kind of coming up with products that will surpass PayPal, right? That would surpass traditional products in finance, and that has to do with the fact that Bitcoin, digital asset as a product, is borderless, right? I don't want to give too much clarity in terms of what these products will be like, but I think the most simple way to look at it is like interest rate around the world, right? If you look at like people in Japan, you're from Japan, if you offer a product that is 5% yield, they'll be like, oh my god, that's great. But the minute you offer a product in Japan and you tell people, I'll give you 11% or 10%, you know what they're going to say? They're going to say, you're a scammer. So what does that show, right? What does that show, right? You're in different markets. Even maybe from a product perspective, you want to give as much yield as you can to clients. But because you're in different markets, they will perceive these things differently. And that's an opportunity here, right? Where there is arbitrage between inefficiency across different markets. And I think Bitcoin, digital asset, is so early because none of these products are coming together right now. And this is why we have several public companies around the world, around Asia specifically, because we want to tackle these problems.
Thanks, Jason. Since we don't have that much time, if you ask me what the next wave of DATs is, I would say just be a better company. Because DAT companies is also just a company, right? Taking a step back, there are two main mandates of a management, right? And first is balance sheet management, treasury management, and capital allocation. The second is revenue generation, operation, and cash flow, right? And when you look at DATs, people look at DATs with just the lens of Bitcoin or digital assets that they hold, and often lose focus on the second part of the business. So for DAT companies to succeed in the future, they should really build a revenue model. They should really build products. They should really build an operating business that fits in the capital market they are in, that can reinforce with the digital asset stack that they hold. The companies that do not do that will be either consolidated or will fail. With 10 seconds that I have at BitPlanet, we are not just a Bitcoin, bag of Bitcoin or Bitcoin holder. We are a operating company with strong revenue, with strong cash flow, and we are building businesses that revolve around our digital asset strategy. And what we are is that we are an energy asset investment platform. I think we are living in a world where energy can be really converted into digital value in two main ways. One is digital capital in the form of scarce assets, that's Bitcoin, and the second is digital labor for energy to be converted into productivity, that is, AI computing. So in the future, we will revolve around three axes. First is mining business. We are partnering up with one of the largest Bitcoin mining companies in the world to scale up our balance sheet and to basically gain hash and distribute hash. On the same vein, second is that we are investing and operating in AI data centers. Same story. We will try to acquire as much hash as possible with the lowest energy cost and distribute the hash. We are also going into the GPU hardware distribution business. Third is our platform. And our platform is our public company. Our public company that acts as a compliant rail to pool capital where we can manage and make flexible capital allocation decisions, which is important because as a company, we can underwrite multiple capex cycles, which funds, ETFs cannot do. So what we ultimately want to be is that we want to be a vehicle of private capital that can kind of funnel into the energy infrastructure build out in Korea, which I think the country needs the most at this point, at this juncture, to really get ahead in this AI arms race that is, really the biggest that humanity has ever seen in terms of capital deployment. All right, I think we're up. Thank you so much.